Well, which is why, Joe, I said when Cramer started things off and said, I'm just not that excited. What am I supposed to hang my hat on? What's the catalyst, for example? And might come back to Jim in some respects, and maybe it's for the bigger picture of what we're talking about right now. Maybe we're looking too hard. Maybe it's not that hard. You're going to get a lot of buybacks. Microsoft announces its buyback. Everybody anticipates more buybacks. That's stimulative to a market rally. So while we're climbing this wall of worry and we're all worried about this, that, and the other thing, buybacks can be a fairly powerful stimulant, Steve Weiss, to where we may go from here, and it might not take that much more than that. Is that a fair view?
Yeah. Yes and no. I think it provides a short-term pop, and then you go back to, okay, what are the fundamentals? But let me frame the conversation just a little bit with a little bit of nuance. What we're talking about markets, and we're talking about what market's going to do. But guess what? All the action is below the market. So while Apple, which is, has a higher beta, I don't want to get too technical, than the market, and while Amazon has a similarly higher beta in the market, that means it moves more than the market each way. Microsoft tends to trade on its own schedule. So there are even other companies, and I think you've got to if you make your portfolio up of these other companies as well, they'll be less correlated to the market and operate in their own fundamentals. So there's always something to do, always places to put your money. And I don't ascribe to the school that if Apple doesn't perform, if Microsoft, if Amazon doesn't perform, that the market doesn't perform. The market may sit there,
why not?
But stocks will perform.
Why not? Maybe in normal times. No. Okay, your view may work in normal times, but not when you've had a rolling correction beneath the surface, Steve. If you have those particular stocks, principal ones that are keeping you from a correction, but you've already had a correction below the surface of what you're speaking about, if those stocks break down, what holds you up?
What holds you up is that in terms of the market, nothing's going to hold you up in terms of the market because it's such a big part of the indices. But what will hold my portfolio up, which I'm more concerned about.
But you're agreeing with something that you just disagreed with. If Apple and Microsoft and the Big Five, the FANG Plus, if they break down in the current environment underneath the surface that we're in, the market is going to have a problem. I think we could all agree with that, right?
Right. So let me clarify. You're right. You're right, Scott, in terms of how I presented it. So let me clarify and correct what I was saying. What I'm saying is there are opportunities to make money away from what the market averages do. Just like they've had this rolling correction while the market has stayed at pretty high levels, despite the 5 or 6 day sell-off, right? We've seen stocks that are down 10, 20%. I own a couple of them. We can also see stocks, individual stocks, move up that don't have that high correlation to the market. And I think that's where you want to be, in quality names, not in the go-go, the hot name of the moment. And I think you can do okay.
But, Scott, that's exactly what the basket of the FANGs are.